Okay, forget Facebook. You're probably sick of it by now anyway, right? IAC Interactive Corp, it is the champ of riskless returns. The Web Collective has delivered the best returns of any internet media company worldwide over the last 2 years, trumping Google and even Baidu. IAC manages more than 50 websites, including Match.com and CitySearch. So should investors keep going full speed ahead on this stock? We've got 3 takes right now for you on 3 versus Trish. Victor Anthony is covering the fundamentals. We have Ryan Dietrich on the charts, and Amy Wu has the options trade. Great to see all you guys. Victor, from a fundamental perspective, what do you like or dislike about this stock?
Well, I like the stock. I have a $65 price target in the stock, which is up 45% from current trading levels. And I value the stock using the sum of the parts analysis. So the reason why I like the stock are threefold, mainly. One, I see an undervalued stock trading at a discount to the growth expectations. So the stock trades at a 7 times EBITDA multiple, and EBITDA grows at around 20% over the next 5 years. And that growth is going to be led by secular outperformance in the search business, as well as secular outperformance in the personals business. And we see that continuing over the next several years.
We've been calling this a riskless return here with this stock. Is it truly riskless? Or when I say, is there something you don't like about the company? Where is the risk here for investors?
Yeah, sure. I mean, no asset is riskless.
Right.
So we do see risk in the model. There's a risk that the toolbar business, which is a sizable business within the search segment, could be disintermediated by the shift of search activity over to mobile devices. And so that's one risk. We also see a risk from IAC being highly levered to Google. Okay. Roughly 50% of the revenues are derived from the search relationship with Google. To the extent that the search business begins to underperform, which you do not see at the moment, then IAC's business could be potentially at risk.
All right, Ryan, over to you. From a technical perspective, you're saying you see some support at 44. Victor Anthony said he'd like to see this one at 65. That's his price target. Is it going to get there, and how might it?
Well, Trish, that's right. Right here, technically, I do think it looks good. The 44 level, if you look at it, that area was actually resistance multiple times from July until January last year. So previous resistance should be support. That's happened so far. Also, this is neat, on a 3-year chart, the 200-day moving average, right where it bottomed last week, is been support for 3 years. So again, that's a nice longer-term trend line. Lastly, as Schaefer's like to look at the 0% year-to-date return, that's exactly where it bottomed. In other words, it bottomed recently right at the break-even year-to-date. And we found a lot of success with that. So all in all, the chart looks pretty good to me. Now, can it get all the way up to 65? I don't know how quickly that can happen. But all in all, for short-term trade here above 44, I think it looks really good, Trish.
All right, Amy Wu, how are you playing it from an options perspective?
Well, Trish, there's actually 2 option trades I like. If you think that you're bullish, you want that upside leverage all the way to 65. I like the July 45 strike calls. That gives you that bullish upside leverage and to an increase in volatility. Obviously, with the market today, you want that limited downside with that upside as well. For Victor's point, as well as Ryan's point about the 44 resistance level, I really like selling the 40 strike July puts. That gives you an entry point as well as collecting premium to that resistance level, and obviously you're getting it below that resistance level.
Okay, and I just can't resist, because we've been talking about Facebook, of course, for days. Let me just ask you your sense, Anthony, when you look at this one compared to something like Facebook, Victor Anthony, why do you like this better?
Well, I'm not going to comment on Facebook. I don't cover the stock today. But I do like Interactive Corp because of the growth aspects of the business. Number 2, I like the capital return initiatives. The company has shrank the market cap by 50% over the past 3 years. We see a company that has roughly 20% of its market cap in cash. Its stock trades at a 9% free cash flow yield. So we're going to continue to see the company return value to shareholders via share purchases, and the company is likely to increase the dividend over time. There's also potential for asset spins and divestitures. The company has had a history of spins as well as divestitures, and we think that'll continue.
Yeah. All right, you know, Ryan, from a technical perspective, and we're watching Facebook continue to hit new lows, it seems like, every day. Now hitting the lowest it's been at just today in today's trading. When you look at both of these stocks from a technical perspective, which is the one that you want to be in?
Oh, I definitely think Interactive Corp, just purely because with Facebook, I mean, like you said, it's going down. No one knows where that bottom's going to be. Interestingly, with Facebook, we were just talking, I don't think I've ever seen a stock where in 3 weeks the overall momentum and opinion goes from one way to just so much hatred. But, you know, interestingly with the options, the implied volatility on this name, on Interactive Corp, it's extremely low. So I like the idea that you can actually buy some options because they're cheap. And if you get some volatility, like we've been seeing today, that's actually a good sign. Because like we said, it's a nice low volatile name that's been going higher. That makes options cheap, and it makes sense to be buying some longer-term options, in my opinion, here.
You know, Amy, when you look at the overall market right now, and you look at all the pessimism out there, when you're playing this from an options perspective, just talk to me theoretically about the importance of stock picking and being sort of very micro in an environment that's as treacherous as this right now.
Well, Trish, you speak to a really good point. One data point that I think is very interesting is the ICJ correlation index is now close to 70%. So what it's saying is correlations are rising. You know, we're trading on a macro environment. Stock picking is important, but one part of using options is to limit your risk in some sense and to also help you be very tactical, especially in a market like this where we're all green yesterday, and we're now all red today, and you know, what's really changed.
Yeah, good point. All right, here's the cheat sheet for you. Thank you to the whole gang. When it comes to IAC, bulls are ready to play. We heard Victor Anthony say IAC is a buy. He likes the company's aggressive stance on capital return investment. He says he could see $65 a share on this one. Ryan Dietrich says the charts, they're looking good. IAC's found a lot of support there around that $44 level. 65 could take a little while, he said, to get there. Amy Wu, she's got a bullish options trade on this one that protects her against a drop in the broader market.